Hello, I'm Karen Brosi, and I'm here with Sharon Kreider, my very good friend from California, both of us, but we are here today in the studio at Western CPE in Bozeman, Montana. And Sharon and I have been talking a little bit about federal income tax. I know, as if we don't have better things in our world to do. But out of some of the discussion, we came up with a topic that we thought we might want to share this with some of our friends at Western CPE. And so, Sharon, I'm going to ask you the question. Back in 2017, 2025 seemed like it was a long time away. But it's almost upon us now. What's the buzz on the Tax Cuts and Jobs Act sunset date at the end of 2025? What do you think's going to happen?
Well, I have my crystal ball.
Yay!
I think this is preliminary. We're talking early. We're talking before the election. We're talking before a change to, I don't know, the White House, a change to the House or the Senate. But we're going to do what I would describe as cocktail party conversation, because you are going to be someplace, Karen, where the discussion will come up on what does this mean for me, the tax preparer, for me, the taxpayer, on the expiration of the Tax Cuts and Jobs Act, TCJA. So we have a written piece of material that Western has sent out as a tax bite or an e-tax alert. So if you're on the email subscription list from Western CPE, you can read some more about what we're going to talk about. So I titled it To Be or Not to Be, because it is a Shakespearean problem on should we extend TCJA or should we let TCJA expire at the end of 2025. TCJA's tax provisions, 86 of them were extensive. A few were permanent, but most sunsetted, and that was about budgeting, right?
Yes.
That's all about budget and a reconciliation bill and whatever else went on mechanically or procedurally in the House. So the first thing that came out as news is the Congressional Budget Office, which is nonpartisan and comes up with its calculation of the costs of any part of a government action, of legislative action, just updated its numbers on what it will cost to extend TCJA. And they increased their estimate of the cost by $1.1 trillion. I don't even know how much a trillion is. But by 1.1, they increased it to $4.6 trillion is the cost of extending all of TCJA for another 10-year budget period. So we know that we already have the biggest deficit, national deficit, that the country has ever had. And the deficit right now in the trillions is in excess of 100% of our GDP. I think it's 120 or 123% of our GDP right now. It's enormous. So the cost of extending adds to our budget deficit by about $500 billion a year for the 10-year period of time, close to $5 billion depending on who you're talking to. But the official number right now from CBO is 4.6 trillion. So that's the first thing to know. So then we have to figure out, should we extend at a $4.6 trillion cost? The revenue in 2026, the first year of expiration, would be increased by 11%. Now somebody is paying 11% more in tax if we do not extend.
If we let it expire.
If we let it expire. They're paying 11% more in tax, And the next year it's 9 or 10% more in tax.
Okay.
And then it drops down to what is more typical of about 3% a year. Revenue goes up about 3% a year. But we would be 11% in 26 and 9 or 10% in 27. Again, that depends on which expert you're reading, the publishing, lots of information on that. That means that there are going to be a lot of people paying more tax. The bulk of the tax benefits in TCJA went to the people who pay the most tax. You notice how I said that?
I like the way you said that.
I like the way I said that too.
Yes.
Because what you read was, oh, the cuts are all for the rich. Well, as you and I know, because we are accountants and tax practitioners, and we know that there can't be tax cuts for the people who don't pay tax. There can't be very
What are you going to cut?
big tax cuts in terms of the ultimate number for the middle people. So where's it going to go? Most of the cuts went to the people who paid. They actually, the bulk of them go to the people who pay, the upper 5% of the taxpayers, which is not the 1%, not the 001s, but more of our clients will see a substantial increase. But I'd also like to say that the middle group, if we let the TCJA expire, one of the real big changes in terms of tax policy was doubling the standard deduction. And that means it would drop back to half, right? And that will be a big problem, a big cost for that middle group.
Yes.
Right, they will pay more tax. Is it 11% more or some more or some less? The wealthier the people are, the more upper income they are, they're more likely to be in the itemized deduction.
Correct. And so this won't change for them. And in fact, it might even be better for them because they have itemized above the current standard deduction. But yeah, it's that middle class. And we saw the numbers on that, which were sort of huge, that right after TCJA, that doubling.
I think the numbers are 95 or 96% of returns now have a standard deduction on them. So what, is it only my returns that have itemized deductions? Salt would disappear. The salt limitation would disappear.
Miscellaneous itemized deductions would come back.
And you know what else would come back? Alternative minimum tax. Ooh. I don't like that one. All right, so we don't want it to expire. Do we want it to extend it? Now we know everything sort of stays the same for the next 10 years. Do we really want to extend it and add $4.5 or $5 trillion to our deficit? Do we care about our deficit? Yes.
Somebody has to.
We're accountants.
Right.
We actually balance books.
Right.
And that has not been what the federal government has been doing. They're not balancing their books.
Well, okay, so now you've left me with extremes, Sharon.
I know.
Let it sunset, and it's going to cost the American taxpaying public more. Extend it, and ultimately I think that costs the American taxpayer, maybe not you and me, maybe our kids, and by increased deficit. Is there a middle ground?
Well, we had this discussion because apparently when you get two tax people together, and Karen doesn't even drink, but you get two tax people together with a bottle of wine for me, and it's all we talk about. And so we were talking about extending or not extending, and did we decide that we would extend parts of the bill?
Yes.
And we would, as it were, split the baby.
But we also talked about modifying some things as well. Like, for instance, I recall that one of the first questions I asked you with, is there a middle ground? What do you do about QBI? Do you pull the rug out entirely by letting it sunset on QBI? And you said, oh, no, we'll just extend it, but we will forget that phase in and wages.
And QBIA.
We'll just make it not available for anybody with AGI over $400,000.
Right. How about
Okay.
that as a compromise? So that still helps the small local businesses.
Right.
It doesn't deal with the patchwork or the last minute to help the big property owners in Manhattan or San Francisco. San Francisco, bad example, because big property owners
Suffering.
they don't get any QBI deduction because you have to have I
Yes.
income. So we could modify QBI and make it simpler,
Yes.
take the complexity out.
Yes.
So I like that. How about doubling the standard deduction? I want to keep.
Because, and I would say that too. In fact, I would leave all of the whole itemized deduction, SALT limitation, because you know what? Leave the AMT alone as well. Because I think you almost balance that way. It's a push. If you drop the standard deduction, eliminate SALT, and bring back miscellaneous itemized deductions, you're going to make it up by those people paying AMT. So just leave that whole section. I would just leave it alone. But, Sharon, what about bringing back the exemptions, the personal exemptions?
We couldn't decide on that because the exemptions would come back with a phase out for high income, the personal exemption. But we have a child tax credit to worry about. The child tax credit was doubled in TCJA from $1,000 to $2,000. The phase out was really increased to a substantial amount, so we dropped back down. I think I'd rather have the child tax credit. I think it's better for this middle group. I really do.
Well, isn't that always the question we ask? Which would you rather have, a tax credit or a deduction?
Yeah, tax credit.
Yeah.
Right? So I think that now you and I have been reading that the Republican Congress, House particular, absolutely wants to extend the whole thing, black and white.
Right.
And the Democrats want to throw out the whole thing. I don't think it's that way at all.
I don't think so either.
I really don't.
think that neither prevails in that way, in much that you and I arrived at the same answer.
Right.
That either extreme is probably not viable, not workable for us. So I think we bring them to compromise, if at all possible. But I believe on both sides of the aisle that there is that willingness in this case.
Yes, I think there's a willingness too, because I just found this and it made me look up the name of the House Ways and Means Committee chairperson, and that's Jason Smith.
Okay.
So Jason Smith basically said nothing is permanent. You know what he was referring to? The corporate tax rate. Corporate tax rate dropped from 35 to 21. And it makes the U.S. more competitive, right? We have a corporate tax bracket tax rate that's much more alike what's happening in EU. And so that made us more competitive. And I don't know if it actually brought in business, but it did stop corporate inversions where corporations were moving to Canada or Ireland, were moving out. So what Chairman Jason Smith said, that they are willing to revisit tax reform more broadly. This is a quote. There are people on both sides of the aisle that believe that the corporate tax rate is not enough, whether you're doing it through reconciliation or a bipartisan approach. If you think the C Corp is not on the table for discussion, every tax problem is on the table. Nothing is permanent. Oh, so did you know that nothing is permanent in the tax law? So this is only our beginning discussion. We're going to be talking a lot more about TCJA. I think Karen and I would agree that there are some things we should keep and some things that we can change, because I don't think in any kind of responsible way, considering our training and our occupation, we would like to add 4 or 5 trillion to the deficit with an extension.
Right. And then in our advocacy role, we don't want to see our taxpayers immediately socked with additional higher taxes on complete sunset. Well, it's been insightful. Thank you so much for taking the charge on that one. And thank you for being with us, and we hope to provide you with more information on an ongoing basis soon. Thanks for being here.